So today, let's go ahead and analyze the Nike stock. Interesting thing is that Nike, 41% of their sales are being generated in North America, which is the largest percentage. Also, Nike sells footwear, sports equipment, and apparel. 66% of their sales are generated from their footwear. Now, if we look at their revenue, Nike has been doing very well with increasing their revenue year over year. When I looked at the numbers, it was about 6% each year. But then from 2019 to 2020, of course, there was a dip because of the economic situation that we are in right now with the pandemic. So this year we saw a 4% dip. Now, if we add the net income to the chart, we can still see that on average, it was an upward trend even with the net income. But the last few years, their net income was pretty much flat. And if I look at their net income, if you look at the past few years, and I looked at the numbers, how fast they were able to grow net income. So in the last 5 years, they've been able to grow their net income by about 7.5%. But this is something that is a little bit concerning, and this is something that I would pay attention to. So when we look at Nike's profit margin, which is pretty much the net income divided by the revenue, you can see that it's a little bit all over the place. What I would like to see is a little bit more consistency and possibly them being able to grow their profit margin and keep it into the double digits. Now, one thing that I do like about Nike is that they've been able to buy back their shares. Now, I don't currently own any shares in Nike, even though I do have them on my watch list. But if you're somebody who does own shares in Nike, this is a good sign for you, because a company that buys back its shares, that means that your ownership in the company grows. And currently, Nike has about 1.6 billion shares outstanding. Now let's switch over and look at how much debt Nike actually has. When I look at the debt to equity ratio, I want to see a debt to equity below 1. To calculate the debt to equity ratio, all you have to do is take the liabilities divided by the shareholders' equity. Anything above 1 means that this company is starting to be a lot more higher risk. Anything below 1, that's what you want to shoot for. Now, Nike has been able to keep their debt to equity ratio below 1, which is awesome. Now, this past year, I'm going to give them some leeway because a lot of companies went through some hardships in 2020. But on average, you can tell that Nike has been doing a great job of keeping their debt to equity ratio below 1. Now, with the return on equity, I like to look at a return on equity in the double digits and consistency, of course. And Nike has been doing a great job of keeping their return on equity in the double digits. The return on equity pretty much showing me how much net income a company is able to generate based on the shareholders' equity. I also like to look at the return on invested capital, which tells me how well a company is able to invest its capital and get a return out of it. I'm also looking for double digits, and like I can tell by looking at the chart, looking at the last 10 plus years, Nike has been able to keep that in the double digits. Now, looking at Nike's stock chart, they're currently trading at 137.41, and just like all the companies this year, they've been hit, of course, in March, mid-March. But looking at the year-to-date chart, you can see that they're trading at an all-time high. Now, with a PE ratio of 81.96, Nike is way too overpriced. I like to see my PE ratios at 20 or below. So currently, Nike is not a company I would buy at a price to earnings ratio of 81. Price to earnings ratio pretty much telling you how much in price are you willing to pay for the earnings of the company, with the price, of course, being the price of the actual Nike stock.